Hello traders, welcome back to day 26 of our trading podcast journey. Today's topic is one that often separates successful traders from those who struggle. We are diving into the power of setting financial goals and creating a structured trading plan. If you want to trade with purpose and consistency, then this episode is for you. Having clear goals and a roadmap can provide a sense of direction and purpose, making the ups and downs of trading more manageable and less overwhelming. By the end of this episode, you will have a strong understanding of why goal setting is important and how to create a practical trading plan to stay focused and disciplined. Let's dive in. Let's start by talking about why financial goals are essential in trading. Goals give you a target to aim for, and having a specific target makes it easier to gauge your progress and keep yourself motivated. Helps measure success. Without financial goals, it's easy to feel lost or unsure if your trading is actually making a difference. Goals help you measure your success and gives you a reason to celebrate each small milestone. Keeps emotion in check. Having clear goals can also reduce emotional trading. When you know exactly what you are aiming for, it's easier to resist impulsive decisions and focus on the big picture. Instead of chasing quick wins, and you will be walking steadily towards something meaningful. Guides your strategy. Your financial goals will influence your trading strategy and approach. For example, a short-term goal like generating monthly income might lead you to a modern or more active trading style, while a long-term goal like growing a retirement fund could shift you toward a more conservative, patient approach. Now let's break down the different types of goals you can set in your trading journey. There are three main types of categories of goals: financial goals, process goals, and growth goals. Financial goals. These are the most obvious, such as aiming for a specific monthly income or a target return percentage. Make sure these are realistic. Setting impossible goals can lead to frustration and risky trading behaviors. Process goals. Process goals focus on the steps you take rather than the results. For instance, making it a goal to review your trades every week, sticking to your trading plan, or analyzing charts daily. Process goals build discipline and help you improve your trading habits over time. Growth goals. There are about personal improvement, like learning a new strategy, mastering a specific type of analysis, or developing stronger emotional control. Growth goals keep you in a mindset of continuous improvement. When setting goals, try to make them smart, specific, measurable, achievable, relevant, and time bound. For example, instead of saying I want to make more money from trading, try I want to achieve a 5% return this quarter by focusing on XYZ strategy. Specific goals give you something concrete to aim for. Now that you have set your goals, it's time to talk about creating a trading plan. A trading plan is essentially your personal roadmap, a guide that outlines how you are going to reach your goals. Here's what a solid trading plan should include. Define your strategy. Start by specifying the trading strategies you will focus on. Are you day trading, swing trading, or holding long-term positions? Include the specific indicators or analysis methods you will use and make it clear so you can stay consistent. Set entry and exit criteria. Clearly define your criteria for entering and exiting trades. For example, I will enter trades when the RSI crosses below 30 and exit when it crosses above 70. Having clear criteria helps you avoid emotional decision and stick to a methodological approach. Risk management rules. Your plan should include specific risk management guidelines. Decide how much of your capital you are willing to risk on each trade. Most traders aim for around 1 to 2% of their account per trade. Also, define your stop loss and take profit rules. Trading routine. Consistency is key, so include a daily or weekly routine in your plan. For example, I will analyze market conditions in the morning, place trades during midday, and review my trades at the end of the trade. Regular evaluation. Finally, make it a habit to evaluate your performance regularly. Review your trades and your wins and your losses. This is a chance to adjust your plan, refine your strategies, and track your growth over the time. Creating a trading plan and setting goals is a great start, but staying motivated and accountable is what will keep you going, especially during the tough times. Here are some tips to help. Track your progress. Keeping a trading journal is one of the best ways to track progress. Write down each trade along with your thoughts, analysis, and lessons learned. Seeing your growth and learning from the mistakes will motivate you to keep pushing forward. Celebrate small wins. Don't wait for a big milestone to celebrate. Even small achievements like following your trading plan consistently for a week or hitting a modest profit target deserves recognition. These small wins build confidence. Find a support system. Consider winning a trading community or finding an accountability partner. Having someone to share your journey with or to other feedback can keep you motivated even during the losing streaks. Stay patient. Trading is a marathon, it's not a sprint. Stay patient with yourself and remember that reaching financial goals takes time. Avoid putting too much of pressure on yourself to achieve quick success. So let's recap the today's main points. Setting clear financial goals gives you a sense of purpose, guides your strategy, and keeps you focused. Different types of goals, financial, process, and growth goals, helps you create a well-rounded trading approach. A trading plan acts as a blueprint to achieve those goals and should include your strategy, risk management rules, and regular evaluation. Staying motivated and tracking your progress will help you discipline and improve your odds of long-term success. Thanks for joining me today. Tomorrow on day 27, we are going to shift our focus and talk about how to avoid common psychological pitfalls in trading. This topic is huge for anyone who wants to maintain a healthy, balanced approach to the markets. Until then, keep those goals clear, stick to your plan, and remember, you are building for the long term. Happy trading. Thank you everyone.